legislation. I'm proud to sponsor H.R. 7056, the Community Bank Regulatory Tailoring Act of 2026. This straightforward bill is another in a long line of bipartisan legislation in this Congress that modernizes the outdated statutory thresholds, imposing needless and disproportionate burdens on our community banks and credit unions. Let me be clear, this bill is not about limiting regulation or weakening financial oversight. Dodd-Frank created one of the most sweeping regulatory overhauls to our financial system in the nation's history, but it was blind to the impact of economic growth on our banking system. Dodd-Frank failed to account for a booming economy like we have now, thanks to the great work by President Trump and this Congress. Static, dollar-denominated capital thresholds properly direct the most rigorous supervision towards the largest and most complex institutions. However, these thresholds have begun to punish and improperly regulate community banks and credit unions that have not meaningfully changed in risk or complexity. We have repeatedly heard from these institutions that, quote, bracket creep, unquote, is a real and growing problem. Under this current framework, institutions are improperly being pushed into a higher regulatory classification, not due to an increase in risk or complexity, but simply due to organic growth in our economy. While the nominal value of their assets has increased, their size and risk profile has remained the same relative to the broader economy. As a result of this higher classification, our low-risk community banks and credit unions face burdensome and excessive compliance costs that drain time and resources and limit their ability to compete and serve their communities. This misalignment doesn't just harm the institutions themselves. It also leads to an inefficient use of supervisory resources. Regulators are increasingly focused on institutions that have only grown on paper rather than in practice, diverting attention away from our more systemically impactful institutions. Our community banks and credit unions are being punished with unnecessary regulation and compliance costs due to factors outside of their control, which is why it's so important to advance my bill that indexes the new thresholds to nominal GDP for these community banks and credit unions, while also codifying automatic adjustments on a permanent basis to prevent these sorts of issues in the future. Thresholds raised under my legislation include the qualified mortgage rule, Volcker rule, and additional thresholds related to annual independent audit requirements for small banks. We have seen time and time again how one-size-fits-all approach has proven unsuccessful and continues to threaten to leave the U.S. with a barbell banking system and many communities' needs left unserved by banking organizations. By updating regulatory thresholds on an ongoing basis, we won't punish our small community financial institutions for merely growing along with the rest of our economy. It is imperative that Congress right-size the regulatory framework for our community banks and credit unions to allow them to grow organically. We all want a regulatory system that is transparent, fair, and safe. That means ensuring large, complex institutions are held to appropriately high standards, but also opening the door for small, low-risk institutions to thrive without the burden of unnecessary compliance regimes that were never designed for them. This committee should seek to modernize the regulatory system to serve local communities, promote innovation, and help local economies grow. It's time to put an end to the one-size-fits-all approach and ensure that our regulatory framework reflects economic reality. Let's create a system that rewards success, that supports local communities, and ensures financial stability. Let's work on this today to make sure that we can advance these community banks in a way that earns bipartisan support. I know many of my colleagues on the other side of the aisle talk about their support for community banks. There's no reason why this common sense piece of legislation should not earn bipartisan support, and I urge all of my colleagues to support H.R. 756, and I yield back.